Hey everyone, welcome back. Before we jump into the really good stuff, we've got to do the usual housekeeping. So, just a quick heads up, this case study is purely for educational and entertainment purposes. It is not, I repeat, not financial, tax, or investment advice. Always do your own research and chat with a licensed pro before making any moves with your money. Right. And on that note, any ETFs or companies we talk about today, they are not sponsors. They are just part of our own research, the things we look at for our own portfolio. It is absolutely crucial that you do your own homework to see if an investment makes sense for your personal financial situation. And one last thing, everything you're about to see comes from our own original research and, our own experience. We put a lot of work into this to bring you something unique. Okay, now that we've got all that out of the way, let's get into the heart of it, our blueprint for investing across the globe. So, welcome to part one of our 5-part case study, our blueprint for global investing. If you're based in North America and you've ever thought, is there more to investing than just the S&P 500? Well, you are in exactly the right place. Over this series, we're going to break down the why, the how, and the where of building a portfolio that's truly international. Here's a quick look at our roadmap for today. We've just knocked out the disclaimers. Next, we'll dig into why it's so critical to look beyond your own backyard for long-term growth. Then we'll get practical and talk about how to figure out the right amount of global exposure for you. And then comes the fun part. We'll walk you through 3 real-world case studies from our own portfolio, European banks, Latin America, and a look at broader markets. Let's get started. All right, so let's tackle the big question right off the bat. If you're comfortable investing in the US and Canada, which are, let's be honest, fantastic markets, why on earth should you bother looking anywhere else? The answer might actually surprise you, and it has some pretty huge implications for your portfolio's health down the road. Just take a look at this chart. This visual says it all, really. North America is an absolute giant, no doubt about it, but it's only about half of the entire global stock market. That means if you're only investing at home, you are literally leaving almost half of the world's opportunities on the table. It's like going to a massive buffet and only eating from one single tray. And look, this isn't just about finding the next hot stock. It's about building a smarter, more robust portfolio. And there are 3 huge reasons why. First, you reduce your risk. North American markets have their own unique vibes and risks, right? Think about US political drama or Canada's reliance on sectors that boom and bust. International markets often dance to a completely different tune. Second, you get better sector balance. The US market is super heavy on tech. By going global, you get amazing access to top-tier industrial, healthcare, and consumer companies you just can't find at home. And third, and maybe the most exciting, is access to pure growth. Some of the most incredible innovation and fastest-growing economies are happening way outside of our backyard, driven by these massive trends like a young rising middle class. Okay, so let's say I've convinced you. You're thinking, all right, looking abroad makes sense. The next big question is, how much? Now, there is no magic number here, but there is a really solid framework we can use to figure out a good starting point for you. So check out this table. These are general guidelines from big players like JP Morgan and Vanguard. As you can see, even if you're a conservative investor, they're suggesting you have about 15 to 25% of your stocks in international markets. If you're more in the balanced camp, that number jumps to 25 to 35%. And if you really want to reflect the global market, you're looking at 35 to 40%. Just take a second and think, where do you fall in the spectrum? It's a fantastic way to do a quick gut check on your own portfolio. But, and this is a really big but for us, investing isn't just about numbers in a spreadsheet. We have this idea we call the heart reason. Your personal story, where you come from, where you've traveled, that stuff matters. For us, having European roots means we just have a more natural, intuitive feel for those markets. That personal connection can be an incredibly powerful compass when you're deciding where to put your money. It makes it real. And that is the perfect lead-in to our very first case study. This is a sector where our head, the data, and our heart, our personal connection, are perfectly aligned. European banks. Let's break down why this is a big piece of our international puzzle right now. So the data-driven story, the head reason, starts right here. And wow, this just lays it out so clearly. Right now, North American banks are trading for about 12 to 15 times what they earn in a year. But look at the European banks. They're trading at just 7 to 8 times earnings. They're basically on sale for half the price. That kind of discount is really hard to ignore. But here's the thing. It's not just that they're cheap. These banks are actually doing incredibly well. They hit record profits in 2025, and they're showing really high returns on their capital. By investing here, you get a direct line to the Eurozone's economic recovery, and critically, you get some fantastic diversification away from the tech-heavy S&P 500. Plus, they're way less tied to the day-to-day craziness of US politics, which adds a nice layer of stability. And here it is again, the heart reason. For us, this isn't just some numbers on a screen. It feels like we're actually taking part in our own root economy. It's a way of connecting our financial future back to a place that we know and understand on a deep level. And honestly, that emotional tie makes us better, more patient investors in this area. So how do we actually play this? We use an ETF with the ticker EBNK. It's an income-focused fund that gives us that core exposure to European banks. And what's really, really compelling is its current yield of around 11%. It gets that by collecting dividends and also using a covered call strategy, which is just another way to generate income. We're going to dive way deeper into European banks in the next part of this case study, so make sure you subscribe so you don't miss it. All right, let's pivot to our next geographic focus. This one is less about value and much more about a pure growth story. It's a region we think is just coiled up for a fantastic run, and it's a place we know intimately from our nomadic lifestyle, Latin America. So why Latin America? And why right now? Well, there are three massive things happening. First, the region is a powerhouse of critical resources. We're talking lithium, copper, all the stuff the world needs for the green energy transition. Second, you're seeing a real shift towards more pro-business politics in key countries, which makes things more stable for investors. And third, you've got this incredible cocktail of cheap stocks, a young and growing population, and explosive tech adoption. And for us, this is an idea that was born from being there on the ground. Our nomadic journey has let us live in Colombia, Brazil, and Peru. We've seen the hustle, the energy, the way everyone is using new technology on their phones. This isn't just about reading a report from some analyst in New York. It's about wanting to put our money into a daily life that we've experienced, that we've seen, and that we absolutely love. That's our heart reason for this region. The way we invest here is through an ETF with the ticker ILF. It just tracks the 40 biggest companies in Latin America. And just to show you the kind of potential we're talking about, our position in ILF is already up 18% in just the last month. For us, this is a pure growth play on the region's economic boom. We'll be doing a full spotlight on Latin America in a future part of this series, so stay tuned for that. Okay, for our third and final case study today, we're going to zoom all the way out. Targeting specific sectors and regions is great, but the bedrock of any solid international strategy has to be broad, simple diversification across lots of developed countries. This is our foundation. And the easiest way to do this is with an index that's tracked by a popular ETF like IEFA. Just look at what this one fund does for you. In one shot, you own pieces of companies, large, medium, and small, from all over Europe, Australia, and the Far East. It specifically leaves out the US and Canada, which directly fights that home bias we talked about. With over 2,000 stocks, it's about as diversified as you can get instantly. Now, our personal approach here is a little different. We use an ETF with the ticker NIHI. This fund takes that same IEFA index, but it generates income from it by selling covered calls. All that means is it's a strategy to earn cash or premiums from the stocks you already own. So for us, it's the perfect combo. We get that broad international exposure we need, but with a heavy focus on high income. It targets a yield of about 10% per year, which fits right into our passive income goals. So there you have it, European banks for that mix of value and income, Latin America for pure growth, and a broad market fund as our solid foundation. The theme through all of this is investing in what you understand and combining the head, the data, with the heart, your personal connection. And now we want to turn it over to you. For the final part of this 5-part case study, we want to analyze a market that you choose. What international market are you most curious about right now and why? What's your heart reason for wanting to learn more about it? Drop your suggestions in the comments below. If you're on this journey towards financial independence, building passive income, and designing a life of freedom, whether that's early retirement or a nomadic lifestyle like ours, we would absolutely love for you to join our community. Please hit that like button, subscribe to the channel, and definitely ring that notification bell so you don't miss the rest of the series. And remember, we drop our full portfolio reveal around the 20th of every single month. Thanks so much for watching, and we'll see you in the next one.